Stop looking at engulfing candles in isolation. This An engulfing candle can appear anywhere on your chart. But the real question is, where did it happen? In this video, I'll show you how I combine Malaysian support and resistance with the engulfing concept to determine my directional bias before looking for an entry.
One of the biggest mistakes traders make is entering the market before determining their directional bias. In this video, I'm going to show you how I use Malaysian support and resistance together with engulfing concept to determine whether I'm looking for buys or sells. Welcome to Snipe Trading channel. Welcome once again to my channel. I haven't uploaded for a while because of my health. I've had series of health challenges, but I'm okay now, thank God. So I'll try to keep up with my upload as much as I can. Okay, so in this video, you're going to learn how I combine Malaysian support and resistance and engulfing concepts together to determine my directional bias. Because the topic of today is how to determine directional bias. Okay, and also you're going to learn what is Malaysian support and resistance. Actually, I have done a video on Malaysian support and resistance, though I did not tag it as Malaysian support and resistance. It's called key levels, how to draw your key levels. I have done that, and how to take entries from those key levels. I've done a video, so I'm going to put a link at the description area, so you just click on the link and go back and watch, or you just check this channel, you see the topic, how to draw from key levels. Okay, how to draw your key levels. Those are the important key levels. Those key levels I drew are the same thing as Malaysian support and resistance levels. Okay, then you're going to learn how to identify the importance of Malaysian support and resistance level. 2. Then 3, you're going to learn what is engulfing concept, what does engulfing concept tells you, and then also you're going to learn how I combine the two of them together, and also how to establish a bullish or a bearish bias, and lastly how to avoid taking every engulfing signal. It's not all the engulfing signals that are accurate. And then also I have one special candle signal. I will have to do another video for that particular one. I'll have to do another video for it and upload it. So it's a particular engulfing concept that's the only candlestick you need. Once you see that candlestick, you can just make your decision. Okay, so that will be another video for another time. So all I need you to do is like, share, and subscribe so someone else can learn as well. All right, so let's dive in. Now, Malaysian support and resistance shows you the levels in which price has actually reacted from in the past. It actually shows you those areas or levels where price has demonstrated significant reaction from in the past. Okay, so now, like I said previously, I you go back and watch that video so you understand those key levels are actually Malaysian support and resistance level. So that's, I'm not going to take time to explain that for today. I'm not going to explain that much today. So, but I'm just going to give you a little clue on it. So the first thing first is I usually use line chart with marker. This is gold, and I'm on a weekly chart. So let me remove all my drawings first. So these balls you are seeing here, all these balls you are seeing here, these balls are the closing price of the previous days. These are the closing price of the previous days. Those closing price are the key levels. Those closing price of the previous days are the Malaysian support and resistance level. There are 4 types of Malaysian support and resistance level. The A and V level, I've already explained in that video. The A and V level, the support break resistance level, the the resistance break support level, the open and close level, which is the gap level, and then the head and shoulder, but they called it QM levels. Okay, so those are the levels that you will see. But now, if I mark these balls like this, if I mark all these balls, just where those balls are, then I just mark those balls, for instance, and then change it back to candlestick. You're going to see the apex level, the V level, the open and close level, the resistance break support level. Go back and watch the video. I'm not going to explain it here, but this is how I mark mine. This is how I get it very easily. I don't have to stress myself. This is how I mark it and get it very, very easily. I just use those balls because it actually shows me the closing price of the previous days or the previous weeks or the previous month. Okay, so this is how I mark those levels. And now, when we talk about directional bias has to do with higher time frame. It's your monthly, your weekly, and your daily that you use to decide your directional bias. The monthly, the weekly, and daily are for directional bias. If you're looking for setups, you use H4 and H1, or possibly M30. If you're looking for entries, you use 15 minutes, 5 minutes, and 1 minute. So the first thing a trader should do is you find your directional bias. That's the first thing a trader should do. So you use a higher time frame to look for your directional bias. So if you are a day trader, if you're an intraday trader like me, I am an intraday trader. I'm not a swing trader. If you're an intraday trader, you will use you're going to use your if you're an intraday trader, the time frame you are going to use for your analysis for the day, because what you are trying to decide is what is the direction for today. Before you even start anything, the first thing on your mind is what's the direction for today. So if you're an intraday trader like me, you're going to use your daily and 4 hours. Now, if you're a swing trader, you're going to use the monthly and weekly time frame. You use monthly and weekly time frame. Use your weekly and monthly time frame. So the very first thing you're going to do is decide what is the direction for the month, what's the direction for the week, what's the direction for the day. That's the first thing you need to know before you even look for setups. That's the first thing you need to know before you start looking for your setups. I see a lot of people run setups without even knowing what they want. They don't even know the direction for the month. They don't know the direction for the week. They don't know the direction for the day. Or they just jump into the chart and look for setups and then take entries. Of course, it might work for you. Of course, it may not work. But the most important thing is you need to know your direction first. So I'm going to show you how I combine both Malaysian support and resistance levels with the engulfing candles to decide whether I am going to buy or I am going to sell. Okay, so that's what I'm going to talk about and how you decide if price reacts. For instance, once price comes down here, for instance, let's say this is gold, this is my weekly. Let me take it back to the line chart with marker, and then I mark this place, for instance. I'm waiting for waiting for price to come here. What am I looking for? I'm looking for that rejection. You can see the series of rejections that happen here. So all I need to do is wait for price to come here. As price came here, what did I look for? You look for rejections. Once you see this rejection, what do you do next? Okay, so that would now decide what's the direction. That's how you know what direction. What do you do next after you have seen that? So before I look for an engulfing candle, I need to know where price is in relation to my Malaysian resistance level. So if price is coming to the support, what am I looking for? First thing I'm looking for is a rejection. Then if price is going to the resistance level and I'm looking to sell, for instance, here, price is coming to this level here. I'm looking for a sell. What I'll be looking for is waiting for price to reject this place. I'll wait for a rejection. And by rejection, I'm talking about these weeks. All these weeks that happen here are rejections. So once you see that rejection, what is the next steps? So that's where I am going to talk about. That's the next thing I'm going to talk about next. So kindly be patient. And now, in understanding engulfing levels or engulfing candle, understanding the engulfing concept, what are engulfing concepts? There are several videos on the internet about engulfing. I think I've also explained something like that also. I think I have explained engulfing concept. I'm not going to dwell on that on this candle. I'm not going to dwell on that. We should know what an engulfing candle is. This is an engulfing candle. Here is an engulfing candle on this weekly. Here is an engulfing candle as well, from here to here for a sell. Here is an engulfing candle. Here is an engulfing candle. There are different types of engulfing. I think I don't know if I've done video on engulfing, but there are different types of engulfing. So that is not a topic for today. I'm only just going to show you the bullish engulfing and the bearish engulfing and how to use them in combination with the Malaysian support and resistance. An engulfing candle does not automatically means buy or sell. It doesn't. There are areas you see an engulfing candle and it will not react as much as you can. And it's not all engulfing candle that will actually give a directional bias. Most of them will fail. Most of them will not give that directional bias that you're looking for. So an engulfing candle in the middle of a range isn't necessarily a meaningful, is not necessarily as meaningful as the one occurring at an important Malaysian or a resistance level. So what I look out for is, first of all, this is the SOP for the direction. The first thing you look out for, you check your Malaysian support and resistance level first, the SOP. So the first thing is mark your supports, your Malaysian support and resistance level. Then two, you wait for a reaction at that level, or a rejection, wait for a rejection at that level. That's what you should look out for, a rejection. There are two things that happen at Malaysian support and resistance level. Is either a breakout or a rejection. So what you are going to look out for, you're looking for, if you want to buy or sell, what you're looking out for is a rejection. If it breaks out, that's why you have to wait. That's why it's good to wait and wait for it to happen. If it breaks out, that means that particular area is invalid. Is no longer valid for a buy or sell. So the first thing you do is mark your Malaysian support and resistance level, wait for a rejection at that level. And then number three, you go one time frame lower. You go one time frame lower to look for an engulfing candle. Go one time frame lower to look for an engulfing candle. Look for or wait for an engulfing candle. Go to one time frame lower and wait for, or look for, let me just say we'll use the word look for an engulfing candle. Okay. Once you see that, you can now decide your direction. Your directional bias is set. Once you see it on one time frame lower, your directional bias is set. Okay, so that's the SOP. You mark your Malaysian support and resistance level, wait for a rejection at that level, go one time frame lower and look for an engulfing candle, and then you will now decide. So, but before we go into full details, I just want to explain briefly on the engulfing candles. The engulfing candle, I actually didn't want to do this, but I just feel I should. I just feel I should do this because you might not understand. There are different engulfing candles. It's only those who are engulfing traders that would understand it. So those who have not learned engulfing might not know. So let me just explain it briefly. Let me just explain it briefly. What did I draw? Let me explain it briefly. So let's assume this is my green candle. This is my green candle. I need to mark it. I need to shade it green. Come on. Let's assume that's my green candle, and this is my red candle. I think I've done this before. I think I've explained these things before in one of my previous videos. This is my red candle. This candle has engulfed this particular candle. And once this happens, this is a week. It's a week. These are rejections. This is a week. So once this happens, you draw your engulfing zone. An engulfing zone is the same thing as people will call it order block, or they call it supply and demand. It's still the same thing. So this is where you're anticipating that price will come back and react here and then sell. So this is a bearish engulfing candle. This is a bearish engulfing candle. That's an example of a bearish engulfing candle. And then for a bullish engulfing candle, this is a bullish engulfing candle because the green candle has engulfed the red candle. So this is a bullish engulfing candle. Now, there are other types of bullish and bearish engulfing. There's engulfing fell and all that. I'm not going to explain that in this video, but I'm just trying to make you understand. Once you see an engulfing candle down here, you know what to do and you know what to exactly what to do. So let me remove this and this and this and this. So in the chart, for instance, this is an engulfing candle. This and this. The green candle has engulfed the red candle. This is how to mark it. You mark the red one from the beginning of the week to the end of the week. You mark the red one. That's for a buy. But let's start here. This is where there was an engulfing candle. Started from this one. This was an engulfing candle. These two green candle did not really engulf the red candle. This is the one that really engulfed this place. So this is the one you mark and write it down. So you can see price came. All you need to do is wait for price to come there, and then so I'm just showing you an engulfing candle. This was another engulfing candle. This one has engulfed this one. Those are bullish engulfing candle. This green candle has engulfed this red candle. So that's a bullish engulfing candle. Now for bearish engulfing candle, the red one has to engulf the green one. So as you can see, the red one has engulfed the green ones. Let me zoom out so you see clearly. The red candle has engulfed the green candle. So how do you mark it? You mark the green one from the open, the high to the low of that candle. You mark it and drag it down. So that's what people will call order block, or they call supply and demand, or whatever, you know. But when you are trading engulfing concept, we call it engulfing, a bullish engulfing or bearish engulfing. That's what we call it. So, but they are all points of interest. They are all actually points of interest. So, as I was saying, so the bullish engulfing and the bearish engulfing actually tells you the reaction. Who are those in charge? It actually tells you the people who are actually in charge. Is it the buyers or the... So once you see a bullish engulfing like this, like you saw on the weekly, it shows that buyers have stepped in and buyers are in charge. Once you see a bearish engulfing, in which the red candle has engulfed the green candle, it shows that sellers are in charge and sellers have stepped into the market. They are now the ones in charge of that market. So you're going to see a potential buying pressure coming from the buyers, and those buyers that will they have actually overcome the previous selling pressure that was coming down. And then for a bearish engulfing candle, you're going to see selling pressure, and you know that okay, they have overcome the buyers. See, like these buyers were in charge, but once this engulfing happened, the sellers stepped in and pushed the price down back. So price came back to this level, showing that came back to this level. What happened here? Price was ranging. There was no engulf until this happened. So now buyers are in charge. So let's see how far they are going to push it to. Our topic for today is direction. So I'm not going to say much more than that. Now, an engulfing candle in the middle of a range isn't necessarily as meaningful as the one occurring at an important Malaysian level. So that's it. Now let's dive into the chart and determine our directional bias. Like I said previously, you start from a higher time frame. Directional bias is basically on higher time frame, monthly, weekly, and daily. But you can also use 4 hours. If you're a day trader, you can use 4 hours. But basically, it's the daily and 4 hours. Okay. Now the first thing is to identify your Malaysian support and resistance level. So what do? I change to my line chart with marker and then identify the levels. I mark my levels, which is here. Let's assume I want a bullish directional bias, which is starting from here. Let me start from here. Let's assume I want to buy. I'm looking for a bullish directional bias. And this didn't happen yet. This particular price didn't come here yet. So I'm going to mark here and here. So once I'm done marking, change it back to line chart. What am I looking for? I'm waiting for a rejection. A rejection at that place. Waiting for a rejection. This is easy market. Their chart doesn't look so neat. Let me put it back here and place it very well. Alright. Easy market, their chart doesn't look very neat. Let me try another. Forex.com. Okay. Remove this. Mark my levels from here and here. Let's assume that's where I'm actually waiting for. You can see how accurate this is. Waiting for price to come there. So what happened? Price came on the monthly and rejected 2 times. Rejected here at the money. Couldn't close above it. So that's what you're looking for. Once you mark that level, the next thing you should be anticipating is waiting for price to come there and then print a rejection. So price actually closed and rejected there. That's what they call monthly reject monthly. And then wait for price. Watch what price does around that area. Okay. You are going to watch what is doing around here for a while. And then after that, once if there is a rejection, the first thing you do is you go one time frame lower, which is the weekly time frame. One time frame lower, which is the weekly time frame, and look for a bullish engulfing candle on the weekly. This is where I begin to develop my directional bias. It doesn't mean I'm going to buy immediately. But what I'll start doing is once I start seeing the rejection happening around here on the monthly, I come to weekly and start waiting for a bullish engulfing candle. As you can see, there was no bullish engulfing candle here. There was none around here. Despite all the rejection that happened. Throughout the week, there was no bullish engulfing candle until this one printed, until this particular one printed. So that changed the monthly bias to a buy. So for now, so that means gold on the monthly time frame is a buy because it's coming from this support until it gets rejected at a resistance level or an engulfing monthly engulfing zone level. Until it gets rejected, I think it has moved to this monthly engulfing zone level, which is here, which is actually here. Has moved there. That's why you're having this rejection. But this is not fully complete. We have to still wait for the month to end before we can say, okay, yes, it has rejected here. The month has not ended. Okay. So for now, the direction is a buy for the month. And then if I am going to do for a weekly, it's the same thing. For the weekly, I'm going to say, okay, price comes to the weekly level, and then I'll go one time frame lower and look for a bullish engulfing on the daily. So on the daily, as a day trader, what do you do as well? What do we do as a day trader? Now, let me use the current market price around here. So first thing first, you change it to line chart with marker and then mark your level. Mark the balls around here because that's where you're anticipating the price will come and react. You mark here as well. That's your anticipation. Let's assume all this one did not happen. So change it back. So what happened? Price came back into that level and rejected. You can see it did not close below it. So that's what you're waiting for. You're waiting for price to reject it. And after the rejection, what happens? You go one time frame lower 4 hours and look for a bullish engulfing candle. See what happened. The moment 4 hours printed a bullish engulfing candle, the direction was a buy. And see what happened. Price bought how many pips from here down here? 730 pips. Okay, price bought. So what you are looking out for is this bullish engulfing candle to be established. So once you see that bullish engulfing, a rejection at the daily level, a bullish engulfing pattern printed on on top of that level, my bias remains a buy. My bias will change to a buy. That's how I do it. My bias changes to a buy. Though you still need price to break a sell around here. This was an engulfing sell and it broke it though. But this established the fact that the the direction has changed to a buy. And see what happened. It bought 730 pips. That's an example. But basically, if you want to really trade it, you wait for price to come back and retest. This is what happened. It came back, retested, and bought again. Came back again, retested that same zone, and bought again. And price had retested it severally before finally moving out of that zone. Retested it severally, 1, 2, 3 times. So, which made your bias a buy. Each time price came into this zone, it picked a buy and went back up. Each time came here, picked back, came back here, picked back, came back again, picked back before it finally broke out and did what you saw it doing. So that is how I determine my directional bias for a buy. So now let's look for a sell bias. Let's look for a sell bias. Okay, first thing first, like I said, go to the daily as a day trader. You go to the daily, you mark out your Malaysian support and resistance level and wait for price to come and react there. You mark out your levels, wait for price to come and react there. Okay, so now let's see this place. Let's use here for an example. There was a level here that was still fresh. So what happened? You mark it. So what happened was when price came down, came back into that level, it rejected. You can see the rejection, it rejected. After it rejected, what happened? You go one time frame lower. I need to mark that. Go one time frame lower. I need to use this. Okay. So let's assume go one time frame lower, which is 4 hours. And then look for an engulfing sell. Look for an engulfing sell. Okay, so you can see there was a rejection around there. Then 4 hours, or would I use here? Because it's a daily candle. There was a rejection around here. It printed a bearish engulfing candle. Once that bearish engulfing candle is printed, it has been established that price is going to sell. So it rejected, printed a bearish engulfing candle, and then what happened? It sold off. It's just what it is. It will sell off. It sold off. How many pips from there? 1,500 pips. Let's just even assume. Even came down lower. It came more lower. 2,000 pips. It sold off. So what you're looking at for, let's assume we picked the sell here. After this particular one printed this bearish engulfing. Let's assume we picked the sell after the price came to retest the engulfing zone. Sold down here. 2,200 pips. So that's how it is to find your directional bias. That's how it is. If you look at it, you check, you see that each time price got to those level, what they do is they first reject. After the rejection, you need 4 hours to print an engulfing candle. Once 4 hours print an engulfing candle, it is guaranteed that it is going to sell, but it's only guaranteed at a strong zones, only at strong zones. If that zone is not strong, it's not guaranteed. If it's a weak zone, it's not guaranteed. But if this zone is actually a strong zone, it is guaranteed. If price is going there for the first time, price is visiting that zone for the first time after it broke down or broke up, it's going to happen. It's actually going to happen. It's going to reverse. So that's how you find your directional bias. That's how you find your directional bias, both on the for the daily. That's how I find my directional bias. Actually, that's how I find my direct. I can show you different examples. You can just backtest it and you see that see that happen again and again and again. You can backtest it, you see it happen. Yes, there are times it fails, and I'm going to explain also when also it will fail. Like I said, if it's at a week, if it's happening at a weak bias, it's going to break out. Now, why did this one fail here? Price came here for the first. Let's see. Why did that one fail? Why did it fail? Why did it break out here? See, price had attempted that level before for the here and rejected and sold down. So the next time it went there, it broke out. So if price has tested a place, is a level or is a zone severally, it becomes weak. So this place was no longer a strong, it became weak because price has tested it. One, two, it's no longer that strong. It's a weak place. It's a weak zone, I mean. So it broke out and then continued buying. You understand? So those are the reasons why it's going to break out. There are other reasons why it may fail. I will explain that also. There are other reasons why it may fail. I will explain that also. But I will do that on and I don't want this video to be very long. I will do that with another video. Okay. So you notice that the engulfing didn't just create the level. The Malaysian support and resistance was already there. The engulfing gave us the information about the reaction at that level. Okay. So that's how I find my bias, because once I see that happen, the following day, my mind will be, I am going to buy the following day. I can show you another example. Let's look for another example. I shouldn't just use one example. Let me use the current, what happened in this current price. Now, this is my daily candle. Change it to here. Mark, mark here, here. These are my Malaysians. That's the first thing. Identify your Malaysian support and resistance level. That's the first thing. Yes. Now, see what happened. Price came here. I'm anticipating that I want to sell around here, this level. So I've marked my level now. Price came here. What am I looking out for? Price came here. What am I looking out for? A rejection. See what happened. It rejected here like 3 times that day. And then what else would I be looking out for? 4 hours engulfing sell. What happened? 4 hours had printed engulfing sell the first day. Also printed this particular day. It did not print, but on the third day it printed because it closed below this particular candle, finally closed below this green candle, which made it which confirmed that price is going to sell off down. It actually confirmed that price was going to sell. So what happened the following 4 hours? See what happened the following 4 hours. Price sold off. Price came back, retested, sold off. See what happened. It sold down to this place. So that was a clean guarantee that okay, price was going to sell off. It showed the direction. There's a rejection here. Since was the rejection here, market has printed a bearish engulfing. See what happened. Price sold down. So let's assume you pick the sell here and you held it down to this place. 800 pips or 900 pips. So that was a good trade. That was a good directional bias. So once you already understand the directional bias, you will be able to know where price is likely going to go to. Okay. So now, when not to take the signal, like I said, there are times it will not work. There are times the directional bias will not play along. Now, why would you not take the signal? The first thing first is, once after you've identified your levels, the first thing is you wait for. There are two things that happen at. There are two things that happens at the Malaysian support and resistance level. There are two things that happens there while you are waiting for price to approach it. The first one is a breakout. The second one is a rejection. So after you've marked your level, you wait for a rejection or a breakout like I've shown you. I also showed you the one where price broke out. It didn't really hold there. It actually broke out. That was towards, I think that the when I drew this level here, I showed you why price broke out. So it broke out, it didn't hold because there are several, it has tested here severally, tested at this level several times. So the next time it approached it broke out. So even after you've drawn your line, what would you do? You're waiting for that rejection. That is why you wait. You don't just react immediately. You wait for that rejection. That rejection is all that matters. You wait for that reaction. So if you don't see a rejection, you are going to see a breakout. And this is what happened. It broke out. This is an example of it broke out from a level here. That's what happened. It broke out. And as it broke out, it continued buying. So there are two things you're going to look for. So that's how you know, okay, it's not going to work. That's why you don't take price. You don't take the trade instantly. You have to wait. You may even have to wait 2-3 days before you now engage. You get, because you need to what you need to see that engulfing that will happen the following. You need to see that 4 hours engulfing candle established at that rejection for you to now say that, okay, my bias is bullish. Okay, so the presence of the Malaysian support does not mean that I will automatically take the trade. I want to see the price reaction before that supports my directional bias. I actually want to see it. So you don't just enter a trade just because price has come to your level. No, you wait for that reaction. Those two things, breakout or rejection. This is where many traders get trapped. They see an engulfing candle and immediately assume the market will change direction. No, you wait for that rejection or that breakout to happen. That's what you need to wait for. Okay, you need to wait for it. So if you wait for it and you see a breakout, that means it's not going to change direction again at that place. That's why it's good to wait, especially once you want to trade reversal. These directional bias are meant for reversal. So especially once you have to wait, especially when you want to wait for those for directional bias. And so to summarize, I don't use engulfing concept in isolation. I first use my Malaysian support and resistance to identify where price is likely to react. Then I watch the price action around that area. If I get a bullish engulfing reaction around that support, I am looking for a bullish opportunity. If I get a bearish reaction around that resistance, I am looking for a bearish opportunity. Okay, so remember, Malaysian support and resistance gives you the location, the engulfing gives you the reaction, and together they help you establish your directional bias. In the next video, I will take you this step a step further and show you how I move from directional bias to my actual entry. So if you're interested in knowing how to take entries, how to take setups and entries, comment, like, and share. Say say something in the comments, say interested, and I'm going to create another video that will motivate me to create another video on how to take entries or how to get your setups. Thank you. Have a nice day.